Let's jump right in. Welcome to This Explainer. If you're a Canadian small business owner, freelancer, or consultant, and you're just trying to get your financials organized without totally losing your mind, well, you're in the right place. Today, we're diving into the sole proprietor path. We're going to look at exactly how to build cleaner records, develop better expense habits, and honestly, just get you to a stress-free year-end.
So, let me ask you this. Are you earning business income right now, but your records look like a scattered puzzle? You know what I mean? Maybe your expenses live in some neglected spreadsheet you haven't opened in months. Maybe those thermal receipts are literally fading into blank paper inside a shoebox. And of course, you're absolutely dreading tax time. Listen, it's incredibly common, but man, it is a massive source of hidden friction in your day-to-day business. Here's the thing about a sole proprietorship. It is incredibly simple to start, right? You essentially just start doing business. But here's the catch, and it's a big one. Simple to start does not mean structure-free. It's so easy to confuse a lack of corporate paperwork with a lack of financial responsibility. But the truth is, your business activity, no matter how small, still needs a solid backbone.
Okay, so what exactly needs clarity? Well, a few key things. First, your income needs reliable tracking. Your expenses need actual support, meaning a real saved receipt, not just a line item on your bank statement. Those messy, mixed personal and business transactions, they definitely need explaining. Oh, and for us Canadians, GST or HST thresholds might actually start to matter long before you ever feel quote-unquote ready to register. Enter the sole proprietor path within Built to Thrive. This is your practical solution. It's designed specifically for unincorporated owners to help build clean records, get that GST/HST awareness dialed in, and prep you for year-end. And the best part? It does all of this without forcing you into complicated, expensive accounting software right out of the gate. It just organizes your responsibilities into 3 really logical layers. Let's look at layer 1, awareness. This is exactly what it sounds like. It's the stage where you figure out what actually needs to be tracked before tax time rolls around. Look, the goal at this stage is absolutely not perfection. Actually, scratch that. Perfection doesn't even exist here. The goal is just visibility. You're simply turning the lights on so you can finally see where your money is flowing. Within this awareness layer, we have some very specific targets. First, you've got to clearly distinguish between personal and business activity. Seriously, no more buying your groceries and your business supplies on the exact same debit card tap. You also need to learn your basic expense categories, keep a close eye on those GST/HST thresholds, and know exactly what a tax professional is going to ask you for later. Once you have that visibility, it builds perfectly into layer 2, which is practice. This is where the magic happens. Record keeping finally stops being this dreaded, chaotic year-end cleanup project and transforms into a completely manageable monthly routine. The flow is simple. Week 1, you review transactions. Week 2, you categorize them consistently. Week 3, you match up your receipts. And Week 4, you annotate any unclear bank activity while your memory is actually still fresh. And to make that practice stick month after month, you just need a few practical, lightweight tools. We're talking a straightforward expense tracker, a simple monthly checklist, a GST/HST threshold checker, and a reliable category reference guide. That's really it. You absolutely do not need some heavy, clunky accounting suite just to make your monthly rhythm reliable. Eventually, though, you will hit layer 3, which is maturity. This happens when simple tracking just isn't cutting it anymore. Maybe your transaction volume has multiplied. Maybe you've hit that threshold, registered for GST/HST, and now you're having to track input tax credits. Or, maybe year-end is just still causing you a bit too much stress and you need a tighter system. At the maturity stage, you're going to make a really fundamental shift in how you operate. You transition from just collecting numbers, which is basically just tracking and saving receipts, to actually reviewing numbers. This is where it gets fun. You start leveraging your data to understand your true profit, proactively manage your cash flow, and confidently calculate things like business use home expenses. Now, just to avoid any overwhelm, let's be super clear on what this path does not cover. It is laser-focused purely on unincorporated owners. So it's not about corporate records, it's not about shareholder loans or calculating salary versus dividends or doing T2 corporate filings. Nope, we keep things highly focused and completely relevant just for sole proprietors. So let's summarize your action plan. It boils down to 5 distinct steps. 1. Separate what you can, ideally by opening a dedicated business bank account. 2. Track what matters. 3.
Always save the receipt support. 4, review your numbers monthly so the paperwork doesn't pile up. And 5, prepare well before that year-end pressure starts building. This natural progression, moving from awareness to practice to maturity, is the entire core of the Built to Thrive approach. Our guides are there to explain the concepts. Our tools help you actually do the work. And explainers, just like the one we're doing right now together, clarify the overarching strategy. I want to leave you with our core mantra for this path. Clarity reduces friction. Structure reduces stress. Let that sink in for a second. When you finally put a simple, repeatable structure into place, that crushing year-end anxiety just dissolves. You finally stop managing your business by constantly staring in the rearview mirror. Remember, you do not need to use every single tool all at once. Just take a really honest assessment of where you are right now. If everything feels scattered, start with awareness. If your records are starting to form, step up into practice. If you need deeper insights, move on to maturity. Ask yourself this: if the tax deadline were unexpectedly moved to tomorrow, would your records tell a clear story, or would you be scrambling in the dark? Start with the layer that matches your records today.